Hello everyone and welcome to my morning report analysis videos on Wednesday the 25th of April with me, Richard Perry, market analyst at Hantec Markets. The Treasury 10-year yield is the key factor that markets are looking out for at the moment. Everyone's been talking about 3% on the 10-year and we are breaking through that, but it's the interest rate differentials that are really the key to what is driving this dollar. We've seen an upside break now seemingly coming through above 91 on the dollar index. Now that has been a key pivot over recent months and seemingly now sort of completes what looks like a base breakout. But you can see the sort of differentials starting to kick back in for sort of a good 4 or 5 months. We hadn't really had a sort of a link between the interest rate differentials and sort of the moves on, say, for example, dollar yen, but that is now certainly kicking back in. Look at how it's done over the past month. Sharp moves higher on the sort of increasing in the spread and on the treasuries versus JGBs, and that is reflective of dollar yen moves as well. And we're seeing similar sort of story with the spread, which is the yield spread, which is now starting to tick higher, 52 basis points back from what we'd seen as 43 basis points just a week or so ago. So we are seeing an incredible run that we're seeing on these treasury yields, reflective of the strengthening dollar, which has sort of resumed today. The markets are sort of putting pressure back on the downside on euro dollar, on cable, dollar yen breaking higher, and also the down on the commodity currencies as well. We're seeing the strengthening dollar. The gold price is also under pressure, back to the downside. I'll talk you through a lot of these charts in a bit, but that rising treasury yield and also strengthening dollar is impacting on risk sentiment as well. We're seeing the DAX over 1% lower now, and seemingly sort of set to break down. FTSE 100 unwinding recent gains, and this is also showing that we've got Wall Street futures 0.25% lower on the S&P 500 forecast at the open at the moment. So lots of key factors are driving markets today. Not a lot of data points though. In fact, we're very light on the calendar. Pretty much nothing until you got the weekly crude stocks. Now we had the API inventories yesterday, which showed a surprise inventory build actually, so that could be some upside surprise to that weekly crude. Those weekly crude inventories could see that, and that could add a little bit of pressure back on oil. But that is generally the only real factor today to really consider. So my chart today, Aussie dollar. Now Aussie has been under pressure, certainly to the downside in recent months with this downtrend channel, but you can look at this long-term uptrend channel, sort of zooming out. Long-term uptrend channel has now been broken by this move to the downside. Look at that sharp sell-off in the Aussie dollar, and that has continued, and you've got these momentum indicators which bear cross on the MACD lines. Stochastics still sort of in negative configuration. As I said, broken that uptrend channel. You've broken the support of 76.50 this week. That's opened 75 figure now, and having broken that uptrend channel, it really does put 75 figure back in focus. So it looks like a run towards that is possible. You got the momentum indicators showing sort of downside potential still. RSI 31 tends to get towards 30, so not sort of hugely negatively, not hugely amount of downside potential, but still I think there is some move to run towards 75 big figure in the immediate term. And you can see here on the hourly chart where sort of lower highs, lower lows, breaking down. 76.20 sort of area seems to be a basis of resistance, and 76.50 that old key low, which now turns resistance. So any sort of moves to unwind the RSI on the hourly chart and back towards maybe 50 is being sold into. Any moves back towards neutral is being a selling opportunity, and you can see the MACD lines have just crossed lower again. So there is sort of this move to sell the Aussie dollar at the moment, and any sort of unwinding move is selling into strength. So I wish you good luck in your trading today, and I will speak to you later. Thank you.